guys, welcome back to Stock Brock. Today I want to go over the three big banks that reported earnings for today. We have JPMorgan Chase, Bank of America, and Citigroup, with a focus on all the key financial figures that came out, year-over-year changes, management commentary, and what risks and opportunities we have ahead. Let's dive right in. All right, starting off with the biggest bank, we have JPMorgan Chase. Net income came in at $13 billion, down 7% year-over-year. EPS down versus the prior year as well. Revenue up approximately 7% year over year. Net interest income, $25 billion, up 7%. Non-interest revenue up 7%. The return on tangible common equity was roughly 18%, and provision for credit losses, $4.7 billion, reflecting higher reserve build for the Apple Card portfolio. And now for the management commentary, CEO Jamie Dimon said the bank delivered resilient results as consumer spending and business engagement remained healthy. The overall U.S. economy is showing resilience. However, he highlighted the risk in the macro environment ahead and regulatory uncertainty. Even as the bank continues investing in new technology and strategic growth, JP Morgan also guided to a higher net interest income outlook for 2026, targeting around $103 billion in net interest income, which is above the consensus. Some of the highlights for JPMorgan Chase consumer and corporate segments remained solid with stable deposit growth. Markets and wealth management saw strong contributions to the business. Reserve build tied to acquisition activity impacted earnings quite a bit. The risk and the opportunities ahead, regulatory change impacts slower consumer sentiment, and expenses rising due to strategic investments in tech and AI. Opportunities ahead, continued efficiency gains from digital products, higher yields on assets as rates normalize, and strong capital position enabling dividends and buybacks. Now let's look at Bank of America. Bank of America actually posted a strong Q4 2025 earnings. Net income up 12% year over year, EPS up 18% year over year, revenue up 7% year over year, and net interest income up about 10% year over year. Loans and deposits, average loans up 8%, average deposits up 3%, and the efficiency ratio improved as expenses grew modestly. The CEO for Bank of America, Brian Moynihan, said the bank delivered solid growth across revenue, earnings, and return, and also emphasized the resilience in U.S. consumers and business clients. He remained optimistic about 2026 economic growth, citing clear tax and trade policy and a stable consumer behavior. CFO highlighted investments in digital and product innovations driving future growth. Some of the opportunities ahead for Bank of America: continued net interest income growth, projected 5 to 7%, strong digital engagement and innovation potential. Wealth and commercial banking segments is continuing to expand. Some of the risk, macroeconomic pressures like interest rate changes and regulatory shifts, competitive pressures in digital banking and lending, and technology investment costs. And finally, we have Citigroup. Citigroup did come in with a mixed Q4 2025 performance. Net income down 13% year over year, which was a big hit. EPS came in above estimates slightly. Revenues up about 2% year over year. Expenses up 6% year over year. Management commentary for Citigroup CEO Jane Fraser continues Citi's transformation strategy with weight on automation, AI, and cost discipline. The quarter included a $1.1 to $1.2 billion loss tied to its exit from Russia, which weighed on their profits, clearly. Despite this, investment banking fees surged approximately 35%, and multiple business segments delivered growth. Fraser highlighted an ongoing restructuring plan, including job reductions. Some of the opportunities for Citigroup include strong deal-making fees and investment banking momentum, continued execution of transformation strategy, solid capital ratios above regulatory minimums, and some of the risk for Citigroup and profit volatility from divestitures and one-off charges, execution risks around restructuring and cost management, and competitive pressures in global banking markets. So what does this mean actually going forward? JPMorgan Chase is positioned for continued interest income growth, but higher costs and higher macro risk remain. Bank of America diversified business model and digital investments offer growth, but regulatory and competitive challenges persist for the business. And Citigroup's turnaround shows progress, but restructuring costs and one-off items may continue to impact near-term results, as shown in these earnings. Thanks for watching. Just wanted to break down the earnings for the big banks. It came in pretty mixed. So as of right now, I'm on the sidelines for financials, but a lot of people do stay bullish. Make sure to watch the macros. Make sure to watch any geopolitical issues that we have going on. It seems like we have a lot going on. Manage your risk. Stay invested. Not financial advice. Stock Rock. Peace.